All right. And Zoom is now recording, so we are official. Welcome, everyone. Thank you so much for coming back to another episode at This Week in Fintech. I'm really excited for this conversation. I'm joined today by Doug Rickett, who is the founder and CEO of Payjoy. For those who don't know, Payjoy is about to celebrate their 10-year anniversary and 15 millionth customer. They're a company whose tagline is finance for the next billion. But what does Payjoy do? Well, Payjoy helps first-time borrowers finance smartphones that they need for work, school, and family connection, often when no other lender will. They're a profitable public benefit corporation that's achieved meaningful scale and positive social impact, and their projected 2025 revenue is more than $650 million with $110 million in profit, all done by opening the door to the modern financial system and helping customers build credit history, often in geographies where there's no alternative for them to do so. Doug is joining us today from sunny Menlo Park, California. He founded Payjoy after serving in the Peace Corps as a teacher in West Africa, working on the world's first complete digital map at Google, and then gaining experience in the pay-as-you-go solar industry at D-Light Design. Some of the core principles that Doug took with him from his experience to Payjoy are that Payjoy never charges compounding interest or late fees and uses fixed repayment schedules for its customers. And this is a major selling point in regions where customer finance is unavailable to much of the population, or compounding high interest rates create debt traps. And so Payjoy has really continued to be a mission-first organization, even as it scales. We're going to talk about a couple things today, from Payjoy's proprietary technology to the Payjoy Asset Fund, to their product growth and future plans, as well as hear about a couple interesting customers and their testimonials and case studies from Doug himself. Doug, thanks so much for joining us today.
Thanks, Nick. Really appreciate you having me on.
Well, I know that we were talking about this a little bit before we jumped on, but I would love to hear the founding story just in your own words. You have such a rich and varied and interesting background. I'm curious how you came to Payjoy.
Sure. Yeah. So people are sometimes surprised, when they look at me and say, "Hey, here's this, Silicon Valley computer nerd. What are you doing in Africa and Asia and everything?" And so the story there, starts, I guess, with me growing up here in Silicon Valley into everything tech, tech, tech. Followed that through to MIT, studied computer engineering, undergrad and master's, and hey, this place has tech in the name. It must be for me. Uh, but I met all these international students in college. I had classmates, I had friends from China, from Mexico, from South Africa, from India. And when I was graduating, I just felt like I had to see the world a little bit more and get my own view of what was going on and what I should think about the globe. And so I joined the Peace Corps, which is the U.S. government-run volunteer service that sends Americans overseas. I believe it was started by John F. Kennedy in the 60s. Um, and they sent me as a volunteer teacher to West Africa for 2 years. And that, I think, uh, really changed my life. I remember the first 3 months there were really probably the most impactful on me. They sent us to these little training villages. And so I was there with just a few other Americans for 3 months. And this little village had no electricity, no running water. My host family that I was living with spoke no English at all. So I got to learn Wolof, the language of Gambia and Senegal, that were one of the languages there. And actually, the language learning experience was a big, powerful thing for me. I didn't think I could learn a language that well as an adult. I spoke some bad Spanish that I'd studied in school, but it was always very academic for me. But people there were so forgiving because there are, English, French, five different African languages, swirling in the market. And so the family I was with, like my 10-year-old host brother became my walking dictionary. And so I learned how to say, "What's that?" Lilanla. And we'd walk around the village and I'd say, "Lilanla, Lilanla, Lilanla." And he'd be like, "Lolu bitila, Lolu kajla, Lolu hinla." And I wrote myself a dictionary. And it was just amazing. Within, a couple of months, I could have conversations with my host family. We had also a tutor from Peace Corps who would teach us grammar on the blackboard. So, today we learned question words or how to say, where are things? And I'd come home and be like, where's the bathroom? Where's the cornfield? Where's Mr. Cisse's house and everything? And it was just amazing. I could start to have conversations with my host family. I'd say I was closest with my host mother. Her name is Fana Cisse. And, it was this mix of kind of serious conversations and joking conversations that really, I think, built this relationship. So serious, I'm talking about things like one time, uh, I'm saying something like, in America, sometimes even when people have money, they're still not happy. And she says, no, here, money is happiness, right? And there's just so much beyond that. I mean, such a deep, rich topic. And I'm talking with someone literally on the other side of it, where, for them, $100 is like, can their kids have good food this month? Can they put shoes on everybody's feet? For me, you sneak $100 into my bank account, I'm not going to even notice. And there's so much behind that. And we could scratch the surface of it a little bit with my, 700 word vocabulary or something, but it was really cool to have that like deep, meaningful life questions. What do they hope for their children in the future? All this kind of stuff. And then joking stuff. Um, they were big into nicknames. Uh, this family where I was, and so at one point I shaved my head, and then my nickname becomes Egghead. And for her, at one point, like the rainy season came in the fall, and she's like picking up a frog, and I call her Frog Mom from then on. So by the end of it, it's like Egghead, Frog Mom, the joking stuff, and the serious, and that's a relationship. And I think that relationship for me really became the anchor of this lifelong interest in international development, emerging markets. Like I've, lived with that family in a mud hut in a super rural village, and I like that part of me is always still there in my chest, in the back of my mind, for like, what would they want? How would they react to this stuff? So that really kind of launched me on this career of international plus tech. So as you mentioned, I came back to Google, um, early days of Google Maps. We launched in 2005, and then I ended up working on a lot of internationalization, so taking the map global. And I thought, this was my dream come true. I have, a team of people traveling Asia and Africa and Latin America, like mapping, from Chile to Kazakhstan to Cambodia. We had a team in Africa that was digitizing the map, a team in India that built really cool digitization tools. And I thought, this is what I want to be doing, tech plus international, perfect. And then what kind of kicked me into the next stage was visiting my Peace Corps host family that I kept in touch with for a number of years. Uh, I visited them first with some colleagues from Google, and then with my wife in 2008. And on that second trip, unfortunately, we showed up and one of the kids had been injured. So this is the younger brother of my dictionary kid. We show up and he's missing one leg that he lost in a farm accident. And real tragedy, of course. And now that I have kids, talking about kids getting hurt, like, really feel it. Um, here as I kind of learned what was going on, this village, as I mentioned, no electricity, no running water, also means no modern medical care. I did see on that trip, though, there's a hospital at the next big town, 10 miles away. There's an ambulance sitting in front of the hospital. But like a lot of things, especially in Africa, like 90% of a functioning system can actually function at zero. And so without a way to call the ambulance doesn't come. Result, kid with one foot for the rest of his life. And it just kind of stuck in my chest. I remember like flying home across the Atlantic back to, Mountain View, California, tech, 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 everything is awesome. Look what we're doing. We're changing the world. But realizing like, hey, but we're not changing it for them. Like they don't have internet, they don't have a computer, they can't use my Google Maps. And so I think I was just feeling unsettled and looking for something more. That's where so I think my heart was open to like, hey, how can I be more directly involved in the impact side, the international impact? And came across D-Light. So a good friend of mine from high school, Ned Tozen, had been a co-founder of D-Light, which was a small solar company, uh, small scale solar for emerging markets. And it was my first exposure to social enterprise, this concept of business with a mission. And it just clicked. It was like, wow, like business means you can scale. You go serve 1 million customers, make money. You're in the right to go after 10 million. You're in the right to go after 100 million. Like as you know, the business side means you can scale it to as big as the problem is. And that's why for Payjoy, we adopted, finance for the next billion, really to remind us like there are billions of people out there. And then it had a, uh, social mission at the heart of it, which for them was getting people electricity for light, like literally to see in the dark instead of using candles and fire, and electricity for mobile communication, like all this powerful stuff. And it was just like, wow, you can do that and make it work. And it was, I think, 2008, the Delight co-founders moved abroad to India and China. And I caught up with my friend, and it was just like, wow, this can work. You can really do this. And so my wife and I talked this over and decided we wanted to like put our full-time life into this thing. And we came up with them with the plan of we moved to Africa to help grow Delight in Africa as our own import export wholesale company, which was crazy stupid because I knew nothing about import export wholesale, but I caught that thrill of entrepreneurship. Imagine me, a 30-year-old, computer person, uh, clearing my first clearing my first container in the port in West Africa, and all the mistakes I made, but really enjoyed that thrill of waking up every day, and the progress I can make is whatever smart ideas I can have and how hard I can work and roll the dice, get some luck, and like that is success. So with Delight, I found the problem that became Payjoy that came out of affordability because people would look at, a solar system in a box could be $300 and a customer would say, this thing is awesome. It's a good value. It has LED lights. It has phone charging, uh, the solar panels, but it's not for me because I pay a few dollars a week for candles in West Africa, or in India, it was kerosene lamps. Uh, And they're actually very financially smart and savvy and good with their money. They might even have $500 savings, but it would not be wise to spend most of their savings on one, luxury purchase, splurge. And so the problem is we didn't have these small flexible payments. They were used to small payments, like to buy candles is a few coins you can hand to a kid. Flexible means you can burn a bunch of candles for a party, you can burn one to conserve, or you can sit in the dark if you have no candles. And guess what? Tomorrow the sun comes up. It's all right. Life goes on. With some luck, you'll find money tomorrow. And so that was missing when we said buy the whole thing up front. And so my idea was, could we instead create these small flexible payments? And so I joined DLA to help commercialize this concept of pay as you go, small scale solar. And we programmed the microchip at the heart of the solar system to shut off at the end of the week if you don't make a payment. Customer can pay a few dollars, the light turns back on. And suddenly you have pay as you go. They can pay weekly, they can pay monthly. And that fit what our customer was looking for in these small, flexible payments. It fit their lifestyle. And suddenly, millions of people have been able to afford electricity and pay for it in the flexible way that fits where they are. So that was really the inspiration for Payjoy. A few years later, with a classmate from Stanford Business School in 2015, we started Payjoy saying, hey, we can do this pay-as-you-go thing. Uh, you know, Beyond solar in Africa, we can do anything electronic. We can program it to shut off. You make a payment, it turns back on. Now you have pay as you go. And that was kind of PageJoy version 0. And we moved into smartphones as the number one hottest device customers wanted. And then from there, we've moved into general credit, letting people use kind of the equity that they built up in their phone or their existing phone. They can use it as collateral to to get credit with a credit. Now we offer credit cards to customers in various countries and use that credit for anything. We have a lot of small entrepreneurs, funding their businesses. We have people who use it as insurance against something bad goes wrong, or this week they don't have any income because they're informal sector workers, and really, uh, letting people get all that benefit from credit. And the mission of PayJoy is really opening access to the financial system to still the half of the world that is excluded today. I'll pause there for my monologue and you can tell me where to go.
No, it's such a fascinating founding story. I feel like I've thought of 25 different questions over the course of that monologue that I wanted to ask, but unfortunately, I only get to ask one. Sorry, I misspoke earlier. I said you were about to celebrate your 10th birthday, but the company did celebrate its 10th birthday this year, and with 15 million customers, you're well on your way to that mission of serving the next billion. I'm not sure if they did it at Google at the time, but when I was working on Google Pay, we talked a lot about NBU, next billion users, and it's exciting to see founders going out there and really building products for this kind of often forgotten massive segment of the world. That's not the target for conventional Silicon Valley products. In particular, I'm curious to learn a little bit more about the technology behind Payjoy. Maybe that's a good starting place. I know there's this mobile security platform, Payjoy Access, where you can use smartphones as collateral. And then you layer on top of that predictive AI for credit assessment to prevent fraud, combine it with human review of customers sometimes so that you can actually serve people who traditionally aren't able to access credit. I think there's a little bit of a reflex in the fintech space where you hear democratizing fintech or serve underserved customers. And often what you're talking about is effectively payday lending, high rate lending, being able to underwrite customers because you're holding them to debt terms that they normally wouldn't take unless they had no other alternative. But with Payjoy, it looks like you've really built technology to be able to effectively underwrite and collateralize these loans. And I'd love to hear a little bit more about it.
Yeah, sure. There are probably a few pieces that fit together. There are the kind of two key technologies. Let me summarize that and then talk about some of the kind of ethical balance in lending and I guess the balance between profit and impact. So on the tech side, uh, yes, kind of the first technology we started with, I remember I showed one of my co-founders, Mark Hanen, uh, was a colleague, former colleague from Google, this prototype of a phone that I had, created a remote control lock where I could go on I handed him the phone, I could go on my laptop and boop, hit this button, and suddenly like you can use any app. Any app you open, it just goes to the Payjoy app. So that was kind of the version zero of that proof of concept. And early days, like, oh, that technology was so messy and a nightmare. We had different like operating system builds for every variety of phone, and keeping track of it was awful. But as it matured and turned into a platform, now it's a security platform that we license to smartphone manufacturers. So we have uh, you know, the majority of all smartphone manufacturers partnering with Payjoy, or majority by market share. So depending on which country you're looking at, 70, 80, 90% of all the phones being sold, we partner with that manufacturer with the Payjoy Access security system. And this thing that's been built over 10 years now, what it does is it lets us securely disable the phone with customer permission in advance in case of non-payment. And what that does, it keeps honest customers honest, and it prevents fraudsters from, uh, basically running away with our money, taking a phone and not paying us. And it's really amazing to me. We went to China in kind of 2017, 2018 era, working with a few manufacturers closely to grow this thing up to kind of that more mature phase. And I honestly didn't think they would take it. I didn't think that major manufacturers would take our code. But we just went through a lot of security reviews and business agreements, and we got there. And so I've gone back and forth over the years and how powerful I think the lock, as we call it, is. But I think it's really going well today. We're deepening it to the chip level and making it more secure. Um, and that's like a lot of security, it's an arms race. So there are every day there are 10,000 people who try to hack it. And if we can resist 9,990 of them, uh, then we can keep the prices down for honest customers who pay on time, and the whole thing works. And that's kind of how that's been. So the lock was our original technology. The second, yeah, with all the AI hype now, I want to both give our team credit for predictive AI, uh, that we've been using since before uh, kind of the language model AI stuff for the last few years. And this is not generative AI that's speaking to you or generating an image, but predictive, machine learning models, using both the best off-the-shelf tools as well as some original in-house research and data analysis. So we had uh, an intern in 2016 actually came back to the company some years later and is now with us as a product manager. But this intern just did this proof of concept. So this was our second year in business, and said, hey, I can take data that was available at the time of sale and predict likelihood of customers repaying us. I can bucket our customers into five buckets, A, B, C, D, E, uh, and say who's going to pay, who's more likely to pay. And there was real separation. And that meant we could start to be more selective. We could add more security. We could change the down payment. If someone's more likely to pay, we don't need as much down payment, which makes it more attractive to them. We can adjust the pricing. And so we've had risk-based pricing, and that lets us get the best offer to the customer and know how much credit we can offer them. Like, should we offer this person $300 to buy a phone or 200? If we get that right, we're more likely to complete that sale, make the customer happy, and be profitable. I love too that there's a lot of alignment between us and the customer for win-win, like that one I just mentioned. If we get it wrong, we either offer the customer too little credit and they don't take it, they walk away, or we offer credit to the wrong person and they default. It's bad for them, it's bad for us. So the data science, predictive AI stuff has been really powerful in making us profitable. I should mention, the lock too. That was kind of the initial thing, is keeping honest customers honest. We found it could cut the default rate in half. So if for any given segment, 10 customers were going to default, now we find about half of those customers will no longer default. And then the AI side, the credit scoring, underwriting, anti-fraud mechanisms we do a lot in-house now, has really made the whole thing profitable. And I'll say anyone can talk about AI, using AI. I see like every company now is like an AI company. I'll just say for us, the predictive AI side, the proof is in the profitability. And so we definitely could not have gotten to 100 million profit this year without both of those two technologies.
It is true. AI has become the number one buzzword in any new fintech pitch, but I feel like a lot of newer entrants to the space don't remember that, especially when you talk about fraud identification or credit assessment. Many companies have been using machine learning for a long time, and before then, they were just calling it statistics before it became kind of self-reinforcing statistical models, before the generative AI wave. I'm curious, do you still find that a lot of applications go into manual review? And is that a goal of yours, to continue to introduce manual review into the process to in turn inform your models and sharpen them? Or has it become significantly more automated over time?
Yeah, that's interesting. So on the anti-fraud side, we have a kind of internal product we call Cyborg. And so that means human plus machine. And this goes back to there's a funny story at Stanford Business School. I do a guest lecture for the big data class, and I took this class when I was there. I tried to get out of it because I thought, hey, I'm a Google engineer, like I know, data and stuff. Um, and I made a deal with the professor to give a guest lecture instead of doing all the work. But then I got worried that if I didn't do the work, I wouldn't pass the final exam. And so I ended up doing both. But I've been going back there for 10 years lecturing. It's been a lot of fun because what I found was I didn't know those tools. I didn't know those machine learning tools just because I knew software engineering. But those kind of best off-the-shelf tools, like knowing how to use them, it felt like taking a woodshop class in junior high or something like, or college. Like knowing how to use, a bandsaw and a lathe and a circular saw and a drill press and like use all those to build something that felt very analogous to me to like knowing how to use all these, random forest, neural network, these different tools, and plug them together. Like just because there's a bandsaw and a drill press in the garage doesn't mean I can like build you know, a chair or a table or a cart or something. So it's really cool learning how to use those. And so still for Payjoy today, I think for a long time until like AGI just wipes out all of humanity, um, that combination of human and machine will continue to be really powerful. And so for us on the anti-fraud with our Cyborg tool, we've built up where the machine is doing statistical, data analysis and the predictive learning side across a huge data set. Like it can look at all our customers and all their activity and all the recorded history of all our customers and everything that's going on. And it can then shine a spotlight on the things that look concerning to it. And then we bring in the human to understand, okay, this thing sounds concerning. The machine has flagged it. with like a yellow flag or a red flag, really what's going on. And we still find value in that human decision at the end. We do try to distill that out. And if the humans are all just following a scripted playbook, then uh, we could automate that playbook. But at least what we're seeing now is, we try to automate as much as possible with the machine and doing the analysis and understanding things of interest. But we're still finding there's a layer of icing on top of the cake that gets you actually quite significant. If the machine can do 90%, that's like something. But when we care about like the difference between blocking like 90% of fraudsters and 99 plus is significant. I mean, that's reducing fraud by a factor of 10 from that second stage of humans still being involved.
It's interesting. These product types, I feel, are pretty competitive and well saturated in markets like the US. You talk about KYC and ID verification products. You talk about consumer asset-based underwriting and lending products. Well, there's a big market for those in the US and it's pretty well saturated. But you go into a lot of emerging markets and, from the outside looking in, it doesn't seem like there are that many KYC providers that are reliable in Bolivia or consumer asset-based underwriting lenders in the Philippines or Tanzania. I'm curious, do you see Payjoy as continue to have this consumer relationship going into the future? Or have you thought about products like Cyborg and thought about licensing them out or taking a mobile-based underwriting product and licensing it out to OEMs so that they can extend more loans through Payjoy as well themselves?
Yeah, it's interesting. So I expect we will not license our internal tools to others. We did for several years. We thought we wanted to be a software company when we grew up and license. Actually, the two key technologies, we called them the Payjoy Lock and the Payjoy Score, and we had APIs for other lenders to use them. And we had this thesis, which I don't think it sounds crazy, that was, hey, we built these cool technologies. We're a tech company. We're gonna license them to lenders around the world in Bolivia and Botswana and Bangladesh, and they will go serve the next billion. Uh, the way we pivoted off of that was in 2020 when COVID hit. A lot of these lenders really struggled. I mean, people couldn't go to work, they couldn't pay their bills. A lot of lenders had, massive shocks to their system. And one that worked really well was we still had in-house lending that we were doing in Mexico. And we just saw that run so smoothly and so well. Our Mexico country manager at the time uh, came up with a system of giving, 3 weeks of free credit to people who've been paying 3 weeks on time, 4 weeks for 4 weeks, I think up to maybe 6 weeks. And interestingly, we had our best credit performance in 2020 that we had ever had. Those customers came back. We had given them 3 weeks of free credit without paying, and then they came back and paid off their loans in full. And we just felt like I can't prove it in a theoretical sense, but in the practical sense, what happened was our own lending operation worked really well. And so we decided to go all in on that vertically integrated model where we develop technology, we use it in-house as the lender. And so from 2020, we shifted all of the licensing we'd done. We wound that down and we shifted back to Payjoy as the lender, which means, today we're not in Bangladesh. Hopefully in the future we get there. There's more for us to do, but at least the path we chose, uh, we've been able to build it sustainably, profitably. So I feel really good. We had another stressful time, winter of 22 into 23, where we had been growing, 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 and then the macro environment pulled back capital. We saw there was not going to be capital to fund money-losing startups. So we said, we don't want to be a money-losing startup. Let's do a hard pivot back to profitability. We did a couple layoffs. That was really painful. And anytime you do more than one, I just feel like on the second one proves I was stupid and didn't get it right the first time. And we did massive asset optimization to really focus on how to make the thing profitable. But we got there, early 23, we got to profitability, and then it's been a good kind of 2.5 years since then of strong profitability and growth. And I appreciate that so much that being solidly profitable means we're in control of our destiny. So if we want to go raise money for something, we can, but we don't have to. We can just continue this organic growth, um, step by step by step. And I think there's a lot ahead. I mentioned briefly, we started with the phone finance and now we're doing general credit. I'd say is kind of the main thing we're doing. And so I think that's really exciting because it's not just the smartphone, it's anything you can use credit for. And, I think what we look like in a year or two, kind of executing on that Payjoy 2.0 vision is kind of like a buy now, pay later. And I look at some great examples of the last few years, like Affirm, Klarna. I think Klarna may go public in the next year. Um, Afterpay, and I think we can do buy now, pay later for everything in the emerging markets, in the kind of, you could say subprime, but it's like 70% of the population in Mexico and Brazil and South Africa and India, and get these people access to finance for everything. And that's really powerful. And most of that relies on that technology number two, the underwriting, where we have learned how to underwrite the base of the pyramid, but it's actually the majority of this half of the world lend to them profitably means we can keep doing it over and over and over and we can keep growing it.
So I do want to come to the future product plans that you're alluding to because I think that there's so it's going to be a big question for anybody listening to the podcast, and there's so much there to unpack. What is PageWay 2.0? But something that you mentioned is scaling an in-house lending business. So when you decided to scale back from licensing to independent lenders and focus on loans that you could originate yourself, you mentioned going in-house. I was at Funding Circle before, as we were talking about. I was at Petal, the credit originator in the US, and I, can attest to the fact that scaling a credit business is a difficult undertaking, but a credit business as opposed to operate like a technology business is particularly hair-raising because you really are subject to so many independent variables over which you do not have control. You can do everything perfectly in a macro environment, can still create significant stress for the company. And so when people talk about in-house lending, I think instinctively they jump to balance sheet lending. But notably, Payjoy is not doing balance sheet lending, or not exclusively. You have the Payjoy Asset Fund. And I was looking through a couple notes on the PJAF, and just as kind of quick background for anybody listening in, what it does is it aggregates funds from over 100 high net worth individuals and institutional investors in order to lend to the target market, including a recent contribution from T. Rowe Price, pushing the assets under management to over 250 million. I'm curious to hear a little bit more about the PageWay Asset Fund and how you've scaled that and how you continue to bring new lenders on the platform.
Yeah, thanks for asking. So this is really cool, and I have to give the credit to our CFO, Bill Yalamas, and our head of capital, Sumit Wadhera, who joined about 3 years ago. And they came in and saw that we had been doing this thing for a number of years, back to very early on, a year into business. My co-founder, Mark, who I mentioned, came up with this idea of like separating out the debt and the equity of PageRate. Like the debt, we would use other people's money for lending. Like we would borrow from them at, 10% and lend and earn 50% and take the spread. And that was kind of the core piece. And I didn't really see at the time, oh, why do we separate out, the money is all money. It's just dollars in one bank account or another. Why have two instead of one? But I think it really made sense in hindsight. And so we've been doing this as kind of a small friends and family program. It really helps to have the Stanford network, pass around the hat, raise millions of dollars. And so when Bill and Sumit joined in 2022, um, I think the fund was maybe, it had been steadily growing from 5 million, 10 million, 20 million. I think it was headed toward like 40 million. And they looked at it and said, this thing has real potential. Let's turn it into a proper fund. I was like, what do you mean it's not a proper fund? It wasn't quite a proper fund. It was a bucket full of 1 year notes. And it just happened that people tended to recycle every year. They tended to re-up. We'd email people uh, whose note was maturing in March and say, do you want another year? And, 80, 90% of the time they would say yes. So Bill and Sumit reconstituted this thing into a proper fund, Payjoy Asset Fund, PJAF for short. And what that allowed us to do, we then grew it to around 100 million, still mostly on high net worth individuals. And then uh, Sumit has been successful in bringing on institutional investors. So it grows a lot faster with institutional investors writing 10, 20, $30 million checks instead of individuals writing like a $1 million check. Uh, but it's been really cool. And I don't know, I think this is not a super common structure that others have done, but it's working really well for us right now. And I think part of it is a lot of Payjoy management, myself, our CFO, a bunch of executives, as well as board members, um, uh, are participants in the fund. And so we're on both sides of it. And that means we have taken a close look at it and we've, iterated and polished this thing to make it safe and fair for the investors. We're like, I am confident, and I answer to my wife that we're not going to lose money having, a good chunk of our savings in this thing. Um, and it's good for the company. And I think we found a really cool balance there, where basically the core covenants of this fund are that the assets are performing well. They can have to continue to perform well, and investors are well protected in a downside scenario where it gets in trouble. And on the company side, what we get from it, it's very flexible. So if Brazil grows faster this quarter, we can move a bunch of the Payjoy Asset Fund money over to Brazil and balance that. Or, we launched a new country. We launched Philippines last year. We're launching Indonesia this year. As soon as those things reach enough scale and they have, a few months of history and the assets are performing well, we can fund that through PJAF, and the lending capital is a solved problem. We raise it in US dollars. We hedge the currency exposure fully, so the investors have no currency exposure. Whether the peso goes up or down does not affect their return. Um, and it goes into the fully loaded cost of this thing, and it's working really well. So I think, today that 250 million is a little more than half of Payjoy's total portfolio of loans. And I think, that's probably the answer for our lending capital the next year or two. And once it goes beyond maybe $1 billion, we'll probably have to figure out what the next scale looks like, and maybe that's, publicly offered securitization or bonds or something. But I really appreciate this cool structure is working really well for us right now.
I'll admit to being a sucker for any kind of elegant business model that creates a new incentive alignment towards joint success, especially bringing parties together that you wouldn't necessarily think of as being in the same business, but finds an elegant way to create incentive alignment, and so that there continues to be a motive to grow something that is socially valuable. Around 20 years ago, when you were in the Peace Corps in the Gambia, and I was taking a social entrepreneurship class in undergrad. One of the books that we got assigned is this book, The Fortune at the Bottom of the Pyramid, which I'm sure you know by C.K. Prahalad. But he was basically talking about business models for fighting poverty through profitability. And it really feels like Payjoy has found this incredibly compelling way to create a true business model around social innovation and entrepreneurship. And so when people talk about impact investing or double bottom line investing, you know, often the idea is that there is an implicit trade-off there, and that you are trading profitability for social impact, or you are trading viability as a business for the opportunity to fight poverty. But it seems like bringing on asset managers like T. Rowe Price, independent of who the ultimate recipients are of these loans you're making, this is a really compelling debt asset class. Do you find that, especially recently, as you've grown to 650 million in revenue, there's more and more investors out there, debt providers, credit providers, who are saying, "Hey, we're interested in talking, and we really think that this is a viable alternative credit that we can gain exposure into. And we don't see this necessarily as creating social good. We're just interested in their performance." Have you found those conversations opening up?
Yeah, absolutely. And there are a lot of interesting angles to this thing. Maybe I'll explore that kind of balance of profit and impact. And we have a document, my co-founder or my colleague Brad Pennington, who leads our kind of risk and data science, underwriting, anti-fraud side. He wrote at Payjoy a few years ago called our pricing manifesto, which is really, the word manifesto is intended to kind of be a little provocative and be like, oh, what are you talking about? But it's also kind of like, this we believe, and we're here standing saying this is what we're doing. And it starts with, I don't know, a few pages of philosophy that kind of lay out this balance between impact and profit. And here's what, typical social enterprise is, and here's a nonprofit, and here's long-term profit maximization. And we're pretty close to, we've that thing, lays out, I'd say we're kind of between social impact and long-term profit maximization. And our business, I think you mentioned earlier, we reincorporated a few years ago as a public benefit corporation. And I feel a little bit like, we pulled a fast one on our private equity overlords, but no, we're not majority private equity or anything. But no, it says, the board directors have to consider the social impact equal with shareholder fiduciary responsibility. And I'm just so proud of that thing. And in a way, it means nothing because, life goes on every day is the same as it was yesterday. But no, actually, it says, you know, we we have stamped in our charter, our reason for existence is our mission, and just as much as, you know, company financial returns. And what that has done, I believe, is it lets us attract employees who are really looking for meaning in their life. And so, there are a few different kind of typical stages I've seen of people, the people early in their career who are like, I don't want to go that corporate route. I want to work on something that's really beneficial. Like I don't need to maximize, uh, just chase financial return. Or they're, wealthy enough they don't need to because they had some success already. I see people also kind of mid-career who are like, they've had a bunch of success and they're getting kind of tired and bored of what they've been doing the last 10, 15 years. And they're like, oh, Payjoy, this is really cool and awesome. You're doing something different that's really touching. Now it's like 16 million people's lives, 16 million people who, had a chance to like start their business, who had a chance to get through a tough time, like really make a difference. So to me, the social impact it, side shows up in motivating our employees and people willing to go the extra mile. It's the reason they choose us. They choose to work at Payjoy instead of other good opportunities they can have. So we get great high talent. And then, as you said, the financial side, I would say we're probably geared one step more financially oriented than most social enterprises. And that's because I believe that is the path to scale. And so because we can do 100 million profit on 600, 700 million revenue, we can go talk to financial investors and we can get the money. We can get the money to lend to our customers. Like our job is to serve the poor and help them get, financial inclusion, get into the financial system. If we don't have the money to do that, the whole thing shuts down and goes to zero. Like nobody is better off. So, we answer to them and then we have to make the best case to, all the capital of the world, why this is an attractive return, why it's safe, why it's good, all that. But we have found more success in in my view, a little more financial discipline to have strong financials, to go to mainstream sources of capital, not just social impact capital, which to me, where it's been more nonprofit focused in the past, it comes with a lot of strings attached. The social impact, the nonprofit, here's a grant, but here's exactly how you have to use it. And we're going to do a lot of follow to make sure you're using it how we want. And if the grant goes away, the whole thing shuts down. Whereas if we're profitable and sustainable and, we have these different commercial lenders, we have people, we have equity investors, we have debt investors who are commercially minded, and it's just a good commercial return for them. I don't care if for them. It's like, you're buying a nice car, and by the way, it was made with, fair labor or something. Great. They're like happy. That's nice. But it matters that we can source all the capital we need on good terms to then supply to our customer. So that's how we've found to make it work is I think being a little more commercially oriented to let us scale. And the end result is, yeah, we want to go serve 1 billion customers. And, let's see if we can do that in the next 5, 10, 15, 20 years, uh, as soon as we can.
So speaking of the next 5, 10, 15, and 20 years, we alluded to this earlier, but I'm very curious to hear in your words what PayJoy 2.0 looks like. I have a couple notes on my end, and I know you, as you mentioned, you've moved beyond just smartphone financing to a revolving credit line and the PayJoy card, which is now in Mexico and Colombia. But you're also, I believe, piloting a digital wallet, remittances, and bill payment for savings and insurance products. What does that kind of 2.0 vision look like in totality?
Yeah. So a few of those things are what I'd call 3.0, which is the longer term. And that, let me start there and say that is, we said, uh, what do our customers need to succeed financially in life in every way? And we can do all the diversified financial services that they need. If you wanted one word, you could call that a neobank. We may or may not be a bank in various countries where we operate. To me, the guiding principle is focus on our customer. What do they need? So we don't fall into the trap of, we like the word neobank, so we're just going to do everything that people think is related to neobank, but focus on the customer. And so that could be remittances. We're starting with wallet where a customer can store money. Once you can store money, you can transfer money between wallets. You can transfer money international. That becomes remittances. Insurance is very close to what we're doing already. Like a lot of exciting, interesting things. But really, kind of this year, next, last year, this year, next year, for me, it's all around Payjoy 2.0, which is credit. And so this is generalized on smartphone finance to everything finance. And so, I think we learned how to underwrite the underbanked consumer in Mexico, South Africa, Brazil, India, et cetera, with smartphones. And then we started saying, hey, how can we use the smartphone security and the smartphone underwriting to get them credit for other things? And so that's the Payjoy credit line and credit card, uh, getting people access to other uses of credit. Um, and just sorry, let me just give kind of a vignette where that comes from. So, Pageware 1.0 or Pageware 0, I said, hey, we can, secure this electronic device and program to shut off, and then people make a payment and it turns back on. So anything electronic, a phone, a laptop, a television, a microwave, a dishwasher, we can make it pay as you go, kind of digitally coin operated. And I was talking to a member of a family that owns a big chain of department stores in Mexico. And he said to me, no, I'll tell you how you can, I said, you couldn't finance a bed. And he said, I'll tell you how you could finance a bed. Every day I have 1,000 customers who walk into my stores to buy beds, and they all have smartphones in their pocket. We can secure the smartphone, and with that phone equity, we can get them credit and they can buy a bed. The bed isn't electronic. We're not going to program the bed to like kick you out of bed or something. Um, And so that was kind of our first step into this, getting people credit for other things from the smartphone. And we've had people, they have no income this week. Hey, this is a way they can keep feeding their children good food. Something happens, someone's in the hospital, right? You have to pay a medical bill. Great, you pay the medical bill, and now you can pay off your Payjoy credit, over the next 6 months. That is a great use of credit. We have small entrepreneurs who, $100 of inventory in the morning turns into 150 by the end of the day. Like that is a great use of credit. Those are all things I'm really proud of. And then from there, I think, we'll go into more into what we call open market, is customers who did not buy their phone with Payjoy, and more into unsecured, where they're not even securing the phone. It's just based on our underwriting and data science and anti-fraud. And then it's really kind of a true BNPL, buy now, pay later, with a brick and mortar focus. Customer walks into any, major department store in Mexico, in Brazil, in Indonesia, and we can finance anything in the store. Like that's a really exciting part of the Payjoy 2.0 vision for me, is getting all of these customers, the total TAM of the global South for everything they need to finance. Like that's what we want to make happen. So that's really the challenge for us the next couple of years.
Well, I appreciate you taking some time to sit down today and talk through what the broader next decade overarching vision looks like. It's such a fascinating company, and I have a million more questions that I'd like to ask, but in the next 2 minutes, I feel like I only probably get to ask one. And so it's a little bit of a deviation, but I'd be very curious to hear your thoughts because you've actually done this. 10 years ago, when you started Payjoy and fintech was in its kind of nascent stages, it felt like you heard a lot about doing well by doing good and making the world a better place. And the zeitgeist has definitely swung a little bit away from that to other products like crypto speculation or options trading that don't necessarily make reference back to consumer good or financial health or social welfare. For young people who are just starting out in their careers today, people who are interested in fintech, what would you tell them, and how do you think we can motivate more people to really focus on socially positive outcomes through tech products?
Yeah, I mean, I think any company, I guess there can be short-term aberrations, but I think any long-term company that's finding success is doing it by delighting customers in some way or another and serving some need. Uh, I think for Payjoy, our focus is the underserved customer, in emerging markets, and that's the majority of the global South. That's 70, 80% of the population in these countries, Indonesia, Philippines, India, Mexico, Brazil, Colombia, South Africa, Kenya, Nigeria, these are all places we look at. Uh, for young people setting out on their career, my advice would just be kind of casting your head forward 10 years and, what do you want written in the arc of your life? And not everyone is going to resonate with the Payjoy mission, and it's not my job to convince everyone that Payjoy's mission is the one thing you should care about. Like, absolutely not. And people who are really excited about crypto, great, go work on crypto. Try it for a few years. Um, but I think, I feel really fortunate, uh, ever since, as I mentioned, my wife and I left Google and jumped off on this crazy international tour with Delay to Africa to China, launched Paygo in India. Uh, not everybody needs to chase those countries or chase the underserved and emerging markets, but I feel really fortunate that I was able to, and that's a lot of things that come together to make that possible. Um, but there's no substitute for waking up, working on something you believe in. Maybe that's the core of it. It sounds a little trite, but like I mentioned, we can catch people early in their career, we can catch people kind of mid, late career who are bored. And I'd just say, if you're at a place where you're bored, um, I get it. And some people and our customers are often, just barely struggling to stay afloat financially. But, if you have the opportunity, I'll just say for myself, um, I'd say family first. And I'm fortunate I've been able to be around for my kids as they grow up and be here with my wife and have that. And then for career, um, I feel so fortunate to be able to work on something that I'm excited about, that I care about. And if I get hit by a bus tomorrow, the PageRank mission is something I'm happy to have on my tombstone. Like, hey, this is what he worked on for the last 10 years. Then a bus ended it. Fine. Like, I have no regrets over spending my time on this thing. And so I think regret minimization is an interesting framework there that can help kind of casting your mind forward and saying, is this what you want to spend your life on?
Well, hopefully that bus never makes it. I I think what you're doing is too valuable for the world, so we need to reroute that bus and find a different schedule for it.
I'll look
I
both
wish we
ways.
had more time to talk about this. It's been such a fascinating conversation. Maybe we'll get around to at some point, and hopefully we won't have to wait another 10 years for the 20th anniversary to have it. But Doug, I just want to say thanks so much for stopping by to talk more about PageWay and what you've been building. I'm very excited to follow along.
Thank you so much, Nick. I really appreciate your time.
You too.